day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 24th of September. And it's the weekly technical analysis for spot gold and dollar yen for the 4th week of September. And let's begin with spot gold, where compared to the other major pairs, it did hang on for most of the week until the Friday, where it did give way and fell through the key support at 1650, hit a low of just below 1640. So on Wednesday, with the Federal Reserve interest rate hike of 0.75%, 75 basis points, it did prove supportive and pushed up higher compared to the other major pairs, which fell. So it did try to push up higher, but could not close above the swing low. So it did pause on the Thursday before finally giving up on the Friday. So it could not climb above this swing low here, and which proved to be a critical resistance, and finally gave way. And it's approaching the 138 Fib extension of this reversal move, and that's at the 1632 area. So it is approaching that critical support zone. We'll see if it's going to have further bearish momentum this week to continue to target that area. But for now, this is going to be resistance at this swing low. And above that will be a critical resistance at 1700 round figure. Let's remove these for now. All right, and beyond that, if it does weaken further, there's a 162 Fib extension further below, but we'll see if it's able to break through 138 first. Not sure whether it's going to fall that much lower. And that's at the 1602 area. So we could, for now, just mark a 1600 round figure level. Which is not much beyond that 162 zone, so that's going to be a critical support zone there. And if we take a look on the weekly time frame, that was the previous week's break of that weekly 200 EMA, which we highlighted, and that slight pullback to retest that 200 EMA, and then continuation move lower. So the follow through was expected. We just need to see how far it can fall. Okay, so clear target is going to be the 138 Fib extension first. And then we'll mark a mark this 1600 as well. Okay, there are some news this coming week with the Key one being the PCE price index on Friday, but that's right on the last day of the trading month. So we'll see what impact that has. The rest are all fairly minor news compared to last week's high volatile environment for all the major pairs. Okay, so let's see whether it's going to drop past the 138 fib extension and target lower towards the 1600 round figure and the 162 fib extension next week or the week following that. And meanwhile, let's also compare and contrast that with the US dollar index, the DXY, to see if that has rallied and broken through higher. All right. And here's the DXY, US dollar index. And from last week, we did highlight the resistance from the 110. And on Wednesday, with the Fed announcement, it shot through this swing high. Shot through the swing high area and hit the 111. We did not mark anything higher than that, but it did pause. After a pause on the Thursday, it had a strong rally, strong push up on the Friday, all the way to hit the 138 fib extension of this swing move. So it has hit its first target, so very strong breakout there on the Friday. So following the Federal Reserve announcement, so the next area of interest would be the 162 fib extension, and that's just above the 114 area. Perhaps we can mark a 114 round figure. That's the next area of interest. This 138 fib is just at the 112, just under 113, so 112.88. And if we take a look on the weekly time frame, that's a very strong bullish candle there. Possible pullback, and could be an attempt to try to hit 114. May or may not hit the 162 fib next week. But we'll see how much bullish momentum there is for next week. Okay, so all these now resistance. Let's move this next area here to a zone. Oops. So from 114 to 114.34, that's the zone there, and support is already going to be at this swing high. That would be a support area, and from For the next level down, this 109 and 786. It's going to be the next key support level. Can remove this for now. All right, so we'll see how much pullback there is before any potential attempt to break out higher, or whether it's just going to consolidate for next week, as it is the last week for the month. May not attempt to break out higher yet, but you never know. It could just go all the way. All right, so with no major US news, there are a couple of minor news, with the key one on the Friday with the core PCE price index. So that could also be a key trigger right at the end of the month, last day of the trading month. Okay, so let's move back to the other majors. Let's move on to the dollar yen, where you can see that after the FOMC rate decision, it did attempt to move towards the key 145 resistance level, and in the morning as well, the BOJ had their rate decision and policy announcements, and they did not change anything. They're still at a negative rate, the minus 0.1%, and the last major economy with a negative interest rate, because in the afternoon, Thursday afternoon, the SNB, the Swiss National Bank, moved their interest rate up by 75 basis points from negative rate, and it's back up into positive territory into 0.5%. So leaving the Japanese economy still floundering. And with that, the Bank of Japan did intervene as it tried, as the currency weakened until the 10, just shy of the 146 level. It hit high of 145.90 before the bank intervened and bought the more Japanese yen, and that fell all the way to just above the 140, fell to the low of 140.35. So this range was a 550 pip range before pulling back up to the 142, and on Friday recovered back above 143. So not sure how effective that intervention is, because it did manage to recover back over 300 pips now of that 550 pip drop. So looks like it's moving into consolidation phase for the rest of next week. Support is still the same, and looks like the critical resistance is at 145, where the Bank of Japan had to intervene as it got too much higher above 145. Okay, so on the weekly time frame, it turns out to be a long-legged doji spinning top. So possible consolidation next week now, and they may not drive it too close to 145. So they may keep it below that, and it's still resilient and not falling into the 140 range because of the interest rate differential now is very significant, with the US dollar already at 3.25%. All right, so that was the difference with the DXY, which rallied, but with the Bank of Japan's intervention, it kept the dollar yen from pushing up much higher. Okay, so let's see how much the dollar yen is going to recover, and whether it's going to attempt to break out again at the risk of further intervention. But for now, looks like the 140 zone is very supportive. All right, so do have a safe week and a good trading week, and as we move into the final week of the month. And cheers for now.